So we can start.
Good evening, ma'am.
Sorry, not audible.
Annapurna Srikanth. Srikanth is a chartered accountant in Mysore, practicing since many years. Audits, consultation, and litigation. Annapurna has been an academic achiever, securing all India third rank in all the three professions, namely CA, DISA, and Company Secretary course. She was of the State GST Committee, FKCCI, for the year 2018-19, and she was also the co-chair Entrepreneur Committee, FKCCI, for the year 19. Faculty of Indirect Taxes Committee of ICAI. She is sought as a resource person at various professional forums and practitioners, trade, and officers in and around. She has authored a book titled Record Keeping in GST, published in July 22. She has contributed to a book titled GST, an Abridged Compendium, for 2019. She was part of the team for a to GST, Institute of Tax Practices of India. Some of GST have got published in e-magazines of professional bodies. Many handy templates, trackers, compendiums, resource material on GST. She is the knowledge for Insta GST, knowledge-oriented GST app. Some of them deliberated by her is available on YouTube, including the one's personal channel. She has bagged medals and has been felicitated by various professional, public, and private organizations. Name a few: silver medals by ICAI, ICSI for securing All India third rank, gold medal by Vasavi Union, Bangalore, Women of Excellence Award. With this brief, I introduce for the members and request her to session and how to optimize the resources and the technology in GST assignments. Thank you, madam. Thank you very much.
Thank you for the nice invite. So at the outset, I would like to thank Southern Indian Regional Council of ICAI for having me over here on this topic of deliberation. So I'll be sharing the screen now and starting this session. So if you look at the topic of the session today, it's titled as Harnessing Technology and Resource Optimization for GST Assignments. Being 5 years of experience in the GST law, we would have been handling compliances for the clients. It could be consultation, opinion, and now the full-fledged litigation which has started off, be it scrutiny of returns or audit under Section 65, where a lot of ADT1 notices are being issued, or even for that matter, inspection under Section 67. So the department has been on the full swing, issuing notices under the various provisions of the GST law. The whole idea of today's topic is how to get things right at the first instance. When any problem comes in, and if the issues are addressed at the root level, grassroots level, or the source from which it emanated, I think majority of the issues will be taken care. Rather than individualizing and addressing the issues, identifying the source cause of the issues and then addressing them will make the life easier. So that is the whole objective of today's session. And one more aspect is, we've always seen that GST is quite a comprehensive compliance-based law, where day in, day out, there is need for doing multiple reconciliation. So today we would be also looking at some of the Excel tools, how we can do especially the ITC matching part, the input tax credit matching, come GSTR to be being implemented from 1st January 2022, where even it has been legalized in the provisions, be it section 16(2)AA or be it, rule related to ITC matching, rule 5960. So all of these has given reference to GSTR 2B, and that provision also has been given effect. So I'm sure most of we professionals or our teams are doing a lot of reconciliation works under GST. So the whole idea of today's session is to kind of put some thoughts about, is there scope for automation? Is there an easier way of doing the things? Is there a better way where system can take care of so many things and only human analysis can be reserved for areas only where it requires? So this is the introduction for the today's topic. And this topic we are dividing into two segments. Part one, where I will be taking you through the GST configuration fundamentals and the repercussions of doing such fundamentals. Since the Tally has been the most favorite software or the most used software by professionals, it's quite a popular. That is the reason. That's all, nothing else. So I would be, taking up through the configuration fundamentals using Tally software. Plus, in the part two of the session, I will be taking through a couple of Excel tools, and also for returns or any other compliances, what kind of data needs to be maintained. Now that things have been taken up for audit, we are realizing how important it is, to kind of maintain adequate documentation. Many times we have seen that a JSON file is generated from any software and it is uploaded into the GST portal. We don't have any backing or the workings for those files, but when audit has come up, there's a lot of struggle happening to reconcile what was filed and what is there in the books and all of that stuff. So the idea and the key is that whenever any return is filed, transaction level documentation is very, very critical to analyze that lump sum figure, what went into the portal, what is the underlying document for it. Of course, in case of B2B transactions, the GSTR 1 itself, we upload under table 4 or the respective, table 4, table 5 and the respective places. But, having it on one consolidated file will always help us. So I've just, I'll be sharing a couple of formats and, a couple of tools, how we can use. Also, I'll be referring to a couple of other tools, what we use in our office. It's just that the convenience, what we feel, based on that, I'll be sharing it in part 2. Now, part 1 is GST configurations. Well, in the configurations, we'll be first covering the quick fundamentals, using the Tally software. And I will also be more on the demonstration side, meaning, one moment. Okay. So I'll be taking you through more on the demonstration side, like I'll be opening a Tally data and then trying to take you through how to practically do it. Plus, my presentation has the screenshots of those configurations for the later reference. So why it is important to configure the ledgers or the masters, it could be, even the inventory items or the group, all of this, why it is important to have it right at the first instance, because if we get the fundamentals right, then the output would be marvelous and as we require. So what are the various levels of configurations? This we will be looking through, and we will have a practical illustrations of various configurations, outward supply related, reverse charge mechanism related, self-tax invoice, for the RCM compliances, what all documentation is required, how to configure and use in the Tally itself, and what are the configurations required with respect to ineligible input tax credit. Let's say we know that ITC is ineligible. How do we configure it in Tally? How to use the statutory reports available in Tally and the mismatch management and resolution. And also, what is the optimal mix of the configurations that would help us in the compliance? I'm sure, it's been, 5+ years of GST. I'm sure most of you would be knowing, or your team members would be knowing, but probably some of the features we might not have used. So with an attempt to make it very comprehensive and meticulous, I've tried to cover the various aspects of the configurations. So couple of handy features in Tally. Firstly, whenever a GST number is entered, there is a gross level validation which happens. If you key in a wrong GST number, like let's say the digits are not equal, not as required. We have the 15 digits GST number. If we enter only, let's say 12 digits. So there is an inbuilt validation which is there in Tally. Let's say I am creating a data's ledger and I want to key in the GST number, and there is an inbuilt validation in Tally which helps us to ensure that the GST number entered is grossly right. And there are multiple levels of configurations which are permitted in Tally. Like, we can do it at the ledger level. We can even do it at the company level. If there is only one service or one product and it's a single rate which applies across the company, then very easily we can configure at the company level, and nothing else is required because it will adopt whatever is done at the company level. At the same time, we can do it at the group level. Let's say we have a group of stock items which all fall under 5%. We have another group which falls under 18%. Likewise, we can put all those 10 items falling under 5% group and configure the group as 5%, so that by default, whatever items are grouped under that will be taking under 5%. Similarly, we can do ledger level. Let's say I want a sales ledger with specific 5%, 12%, 18% rate. So I can do it at the ledger level also. And let's say I want to override things at the transaction level. My 99% of the transactions are all 5%. Only few transactions are 12%. I don't want to have a different ledger. So I want everything in a single ledger. Then at the transaction level, I can override it. I'll be showing all of that in today's presentation. Now, mismatch reports and support for corrections. We have configured the ledgers in a particular way, but while making data entry, we have done it in a different way. I'll give you an example. I'm using a interstate sales ledger and recording a CGST, SGST transaction, which is a contradiction, right? In case of an interstate, it should be an IGST transaction. So does Tally prohibit from making the very data entry itself? It doesn't prohibit at the first instance. It will give a prompt. There is a mismatch. Do you want to override? If we say we want to override, it accepts and proceeds further. But in the mismatch reports, we can see what is this mismatch which is coming through here. So hence, these are some of the handy features which are available in Tally, and which we can use and explore so that the data entry goes right, the output comes right, the returns go right, and the smooth compliances happen, or even at the time of litigation, all these things can come very handy. So this is the master setup, a quick fundamentals. We have to enable the GST details in Tally. The master setup can be with respect to party setup. When I say party, it could be customers, it could be vendors, it could be employees, any party for that matter. It could be inventory setup meaning the stock items. Then income and expenditure, that is ledger setup. Any ledger setup, duty ledger setup, like we have CGST, SGST, IGST, CES. All of these duty ledgers could also be set up as per the available configurations. Then various transactions, sales, purchase, expenditure, fixed assets, all of this. So these things we would be covering. Now coming to the fundamentals of configuration. By and large, you have three categories. I would say two categories. Let's say you don't do anything. Then we have the third category here, GST applicable, where any ledger we are configuring and there is something called as, there is a GST is applicable in that case, then we will select GST applicable. If not, we can also select GST not applicable. Or if we don't take any action, we will not do any configurations. We'll just create a ledger and save it, Control A. Then GST will be undefined. Now, most important point to note here is wherever GST is selected as not applicable and GST is selected or no action taken and no configurations done, then both of these will go and reflect in not relevant to returns. I'll just show a practical case out here. So first thing, let us look at the master setup. We have the alter option. I'm using Tally Prime here. I mean, similar options are available in Tally ERP 9 also. Here, I want to do the master level configurations at the company level. So here I have, so where I mean from gateway, I will use alter here and then go to statutory details, and here I go to GST details. So here I have my basic, kind of, GST related configurations which I do. And let's say I want to alter these details. Here, let's say my entire company, we have the consulting services classifiable at HSN 9982 and it is taxable and it is 18%. Okay. So this is a company level setup where if I do not do any other configurations in the ledger level or the group level, then automatically everything will be taken by this master configuration of the company. So this is how I do the company level configuration. Now I was talking about GST applicable, not applicable, undefined. Let's practically see what it is. Okay. I'll just take some sales ledger. I have, we have multiple. Okay. I'll just take this sales at 12%. Okay. Now I did a control enter so that I will go to the master configuration of the ledger. If you see here, there is something called as GST applicable. And if you select, there are two things. One is applicable, one is not applicable. Okay. Now let's say you don't want to select anything. You will just say Control A. Then it will show as undefined. Okay. Now I'm selecting as applicable. This is a sales at 12%. So once you select applicable, there is further, things which is possible. Now, to practically give an example, in case of dividend income, which is a no supply transaction, similarly salary payments, which is a no supply transaction, we will select as not applicable so that it is not relevant for the returns. And once we select as GST applicable, we can do this select alter GST details where all these configurations are possible. Here one is the description as per the HSN, whatever is the description that we can show it here. Then we can enter the HSN. Suppose at my ledger level itself, I have only one product or one service which is having a single HSN, and I want to enter it for the ledger itself. I can do it. Then here I can select the nature of transaction, interstate, intrastate, this is also a further configuration which is available. In fact, it's a lengthy list, taxable, exempt, nil rated, exports, all of this, intrastate, interstate. So this we can certainly take it up. Sales taxable is intrastate by default. If at all it is an interstate, there is a specific prefix available here as interstate. So certainly we can do further configurations of whether it is inter, intra, taxable, exempt. And once we select as taxable, we can also select the rate here. Let's say I want to, this is not a nil rated transaction. It's a sales exempt. No, it's a sales taxable and it's at 12%. So I'll just select the rate here, and that rate part also we can do it. Now, there is also a possibility to select whether it is RCM. Okay. So we have to enable for that. Here, enable reverse charge. I can do F12 over there, and we can say if it is goods or services. And let's say I am a GTA service provider. I want to enable reverse charge transaction. So I will enable yes here, then save it. Now, if you observe here, you got reverse charge applicable, yes. So once we select this as yes, the entire ledger for my GST reporting, the recipient will have to pay the taxes. I will only raise a reverse charge invoice. So this way we can also configure whether it is RCM or not. Then let me show you an expense related ledger. Let's say I am going for this purchases at 5%. Okay. Now in this purchases at 5%, I will go as applicable. Then once I select here, it will also ask me whether it is non-GST goods, whether reverse charge is applicable. Here also, let's say I am receiving this services from a freight, like the GTA services I'm receiving. I can enable reverse charges so that I can discharge this on RCM basis. Now here, there is an option set ineligible input credit. Let's say your credit is not ineligible. Let's say this is a restaurant service. The lunch bills or the restaurant bills are not eligible for credits. So I want to set this ledger itself as ineligible so that I by mistakenly, I don't claim it in my returns. So this feature is also there in Tally. So, by and large, once we select GST is applicable, there are so many further configurations which are possible. And if we select GST as not applicable, then it will simply, allow me to proceed further without any further configurations. If we simply save the ledger, then no configurations will happen. Now, let us see the effect of this. Now, we have this display more reports. Then we have the statutory reports, we have the GST reports, we have the GSTR 3D. Okay. Once we select this, let it get loaded. I will show you the relevance of what happens whenever we select GST not applicable, where it will go and sit. Okay. Yeah, it got opened. Now, if you see in this 3B report, which is a part of the statutory report, there is this segment called not relevant in this return. Now here, these are all non-GST transactions because I have selected it as not applicable, or I've selected it as not applicable, or I have not done any configuration. So hence it has gone undefined. Now, what are the levels of configurations? I already showed you how to do a company level setup, rate setup or the GST configuration. All of that I already demonstrated. Now let us see how to go about with the inventory. Okay. We have this stock report. Let's say, so this is here comes my GST applicable. If I want to set alter, here I have the description, whether it is what kind of a goods, and I'm selecting the rate. So it is asking me how to calculate the rate on this. Let's say if I want to do I want to give a discount at the item level, and that discount should not travel to my GST computation. Certainly I can do that also by enabling the appropriate aspect here. So this is the stock item related configuration. Now, when it comes to stock item, I can do it stock group, stock item, and also I can also further do the unit level. I'll just show you that also in a while. Then accounts. So the ledger related, again, we can do ledger group and ledger, individual ledgers. So let's say I want to configure a particular group. Okay. Let's say I want to configure a ledger here. So here also I can configure it. Let's say I'll take another example here. I want to group this under, it's a primary group. I want to create another group. I want to group this under oils. Okay. Here for the group, I want to do provide the rating. Okay. So now entire group became like a ledger configuration itself. Now taxability, I want to say taxable, and I want to say 5%. So whatever I create under this group will become a 5% rate by default, but I can still go and alter at the item level also. That is also possible. Now, transaction level. Okay, I'll give an example. I'll take this 12% rate. Okay. Now we have this output CGST at 12%. Now, although I've configured this as 12%, okay, I want it as a 18%. Now here it asks for the description. I will enable configuration here. Wherever you want to, change any configuration, it's pretty easy. You can just enable F12 and you'll be there. Now here you say, modify tax rate details of GST. So in the GST details, let's say by default it's a 12% rate, but for this transaction you want to override it and make it as 18%. Then once you enable this as 18%, here it will ask me. Now let's say I want to make it exempt. Okay. So although I've selected a 12% rate, it is allowing me to make it as an exempt at the transaction level. Now, here if you see on saving, it will say tax details are modified, whether you want to accept, override or back. So this is the transaction level configuration. So by default, it's a 12% rate, but here you want to make it as exempt. So that's how even transaction level you can change it. Now, this we covered, company level we covered, inventory level we covered, even HSN rate and UQC, and group level also we covered, account level also we covered. And this transaction level, we can override these things. Yes. Now, let us say we want to have another UQC. Now, what is an UQC? A unique quantity code. Okay. Let's say we want to create another unit. Okay, we want to create another unit. Now, the maybe by the name tins. Okay, so tins is already there. Let's say I want to make it as sachets. So, is it the formal name is packets, but I want to call it as sachets. Now, probably I'll have to relate to the existing drop down. So let's say I want to go as it's a separate unit by itself. So I will link it to that, and I want 2 decimal places so that ml, the milliliter also I can include. So this way I can create a UQC separately than what is available in the drop down. So this part I covered. So these are all the screenshots for your reference. How we can create the various configurations what we discussed now at the various levels. Then coming to this duty ledgers, we have this current liabilities, duties and taxes. So this is just a demo tally data. So here we have this let's say we want a single CGST SGST ledger, that also we can do for output separate, input separate. I would prefer having a separate so that for reconciliation it will be easier. At the same time, more ledgers means more errors in the data entry also. So probably we may take a call. Let's say this is an output. So this is under the duties and taxes. Here we select the type of duty as GST, and then we select the rate also. So by default, whenever we make a data entry, this 9% will get automatically selected and computed, auto-computed in the voucher entry. So that way, we can configure the various duty ledgers, including the cess. We can give whatever name we want, but what is important is what we map here. If you look at the, I'll just show you what I mean by mapping. So here it is important. Let's say the name I've given as CGST, but I'm selecting cess by mistake. So the system will assume it to be cess only. It will not recognize what name I give. What I map to what tax type I map is very critical. So this has to be one-time configuration, has to be very carefully done. Now let us move in for the outward supply transaction configurations. Now this is the outward supply configurations. Broad-based, I just shared it previously. Let's go a little bit more in detail. Okay, so I'll just take up this sales. Now, once I say yes, here I get the various possibilities. Okay, suppose if it is only a it is my own branch, but where to another GST number I am doing it. So whenever there is a single tally data which is ultimately clubbed for the purpose of income tax filings, where all GSTs, all the branches are put together, I think at that time these things will get handy. There is also this deemed exports related categorization. Every category you will find exempted, nil rated, and taxable. Exports also, we have the exempt, LUT, that is with payment, without payment. All those options are there. Interstate, intrastate, again we have this deemed exports. For every category you have taxable, exempt, nil rated, and also you have interstate, intrastate. Even SEZ is available, exports is available. So this way, all these specific category itself we can configure for the outward supply related transactions. So once we configure, many of the things can be automatically taken care of. And of course, in the same invoice we can do the multiple rating also, which is because based on these items, each item might be having a different rate. So all that is possible here. If you see the screenshot here, there is a 12% rate and 28% rate. Since it's a with inventory data, whatever rates have been configured for the items, the system will calculate the IGST based on that. So if we see there is a single IGST ledger, there is no IGST 18%, IGST 12%. Likewise, separate ledger is not there. Single IGST ledger is there. But if we look at the tax analysis, then we get this, 12%, 28%, the breakup for how much tax has gone in, we get the breakup here. So it is very conveniently possible. Another option which is available is bill to ship to. So let's say we want to enter a bill to ship to transaction. Okay. So once we use here F12, we can have the use buyer consignor name separately is an option available. Allow separate consignor option is there. I think it has to be enabled at the basic level. Yeah, I'll just take you through that. Anyways, so that option will be available here for the sales invoice configurations. So certainly once we enable that, we get the option of bill to ship to. Now, similarly, rate related configurations, we saw interstate, intrastate, separate we can have. See, there is an option like a single ledger, sales. We will have a single ledger called sales, and the products will be configured as rate wise. So that single sales ledger itself we can use, and multiple products can be entered therein. Or if we want rate-wise separate ledgers also, we can have. It is, however, we wanted that flexibility is there. So this is again an exempted one. Now, another aspect which I would like to take you through is creating voucher types. This is quite important and helpful, for, let's say, bill of supply. For all the exempted transactions, we need to, have a bill of supply. Let's say bill of supply new series. And this will come under the sales configuration itself. So that whenever we want to use it like a exempted related transaction, we have to use a bill of supply as per the corresponding rules, section 31 read with the corresponding rule, which says that whenever it's an exempt transaction, you have to issue a bill of supply and not the tax invoice. Of course, there is a rule 46A which talks about invoice come bill of supply, but if you nevertheless, if you want to issue a separate bill of supply, here we have given an example of interest received, because 12/2017 serial number 27 talks about exemption of from income received from deposits will get classified as an exempt transaction. So a bill of supply is even required for the interest received also. So this is the configuration and this is the entry. And one more important and probably missed out aspect is whenever an RCM transaction is done, most of the times we, the computations happens on Excel. There is a GTA service provider, and for that the table 3.1D of 3B, what we will do, that reverse charge computations will happen, go there, we claim the credit in table 4A3 or wherever it is applicable, and we just finish on it. But if we look at rule 36, every credit claim should be substantiated with the credit claim document. And with respect to RCM transactions, it is self-tax invoice. Now, having too many different sets of documentation will always be difficult to compile on a later stage. Now, it is an expenditure, correct? RCM is being discharged on an expenditure. Now, if you raise an invoice, there will be an effect of double posting. Same transaction, you end up posting twice. So you want a document, but you don't want the posting effect. So there is something called as optional voucher in Tally, where you can configure a self-tax invoice. I will just show you how to do that. So let's say you want to do a self-tax invoice, okay? Self-tax invoice, the configuration type will be sales. Okay, you don't want any, you want the automatic numbering, all those regular configuration. Here you have this option, make the, voucher type as optional. Why am I doing this as optional is, I don't want the posting effect to happen to this ledger and this voucher type. So that is why I am making this as an optional feature, optional voucher, so that it will not post and have any impact. I'll also show where to access these reports also, okay? So by enabling this optional voucher, we can create self invoices, and we will use like the local transportation RCM, whatever is there. So for that 5% is the whatever the CGST, SGST, this optional voucher will be there. And then this is an example of an interstate where under 5.3 section 5.3 of the IGST Act, where if I procure services from outside the state where place of supply, as per the place of supply provisions, it's a 5.3 transaction, then I need to raise this IGST self invoice. Here is an example of 9.4 RCM. At present, it is applicable for the real estate sector, where the new notifications which came effective from 1/4/2019 says that whenever the procurement is I'm not going to the legal provisions of it. So real estate sector 9.4 is applicable after a specific threshold. So that case, we will issue a consolidated 9.4 RCM self-tax invoice for all the transactions put together falling under 9.4 RCM. Okay. Now, how to access these reports. Display. We have exception and reports. We have optional vouchers. So if we look at here, we have this self-invoice, which we get it, okay? So all these invoices are optional. So we can access this so that in GSTR 1 also, table 13, we are required to report the number of self-tax invoices we can extract from here. So now this is a GST payment voucher. This is not the regular accounting payment voucher. Section 31(3)(f) talks about self-invoice. Section 31(3)(g) talks about payment voucher. For every RCM payment, there is a GST payment voucher which needs to be issued. Now, payment voucher should be in the format of purchases. Okay, so that's why what I do is, I will just, let's say voucher type. I already have a GST payment voucher type. I'm just showing you that. So select the type as purchase and, select as optional. Because this has to be with regard to every payment you make. This is not with respect to every transaction. The transporter might give you some consignment note or bill. Okay, let's say it is of 10,000 rupees, but you are making two chunks of payment, 7,000 and 3,000. So probably you will raise a single self invoice, but while making GST payment vouchers, you will have to have two GST payment vouchers because it is payment wise. And this is applicable only with respect to RCM payments. Now, the configuration for no supply transactions. So I already showed this. Whenever it is like dividend received, it's a no supply transaction, you have to configure it as not applicable. So these are some of the points, wherever there is no impact of the GST, you may take it as not applicable. And, even for the purpose of bank interest, you might be wondering, I'll just take you back to that screen. Now, whenever you raise a bill of supply, how would you do? Now, ICICI Bank will become your debtors because you're receiving interest from them. So even this configuration should be required. Most of the times we just say interest received and bank entry, whatever the bank entry. But since we are required to pass a voucher here, pass a document here as a bill of supply, we have to create this debtors, this thing also. Yeah, this was one of the points which I wanted to mention. Now coming to this inward supply configurations, it's all by and large the same. We have additional things. Instead of exports, we have imports here. And we also have this something called as this unregistered dealer. Wherever we want to do the RCM related, configurations, let's say we make a purchase from an unregistered dealer and we want to configure it accordingly. See, it could be an expense-wise ledger, or it could be even from the GST compliance perspective, we can have multiple ledgers. So that option is there in Tally. Now, I already showed you this as to how do we configure inward supply related RCM configurations. Once we go to the ledger configuration and click on F12, we get an option whether reverse charge applicable, you want to enable it. Once you say yes, you can say that reverse charge applicable is yes. Yeah. So on making the entry, we will have this coming to the GST statutory reports. I would like to show that as well. Once we are completed with this configurations related discussion, I'll take you through how it will have an impact on my GST returns related reports. So these are all the interstate, intrastate, just screenshots for the reference purposes. Then we covered all of this. Yeah, one important aspect is how do we configure an expense voucher having GST? Most of the times we have seen that a couple of accountants have been shifting the very head to purchases with an intention to claim the credit. That would be a wrong methodology, because it is not your purchase. It is direct expenditure. It is not part of your trading account, rather your P&L account. So how to do that? Now, what we can do is we can have another category of voucher called expense voucher. It's pretty easy to create a voucher type. You have the gateway of Tally. You can go to create and do a voucher type creation. And here you will say whatever voucher type, like say you want to do an expense voucher with ITC. Okay. Expense voucher having ITC is a category which you want to do it. And it will be definitely of the type purchase. It's not a purchase ledger, but it's a voucher type which is configured as a purchase, so that you get a breakup of the GST, whatever you record, and that will travel to the statutory reports. At the same time, you will have your heads properly. All these indirect expenses will go and sit in your indirect expenses itself. So this is a very important aspect where you can configure your expense voucher having ITC with this kind of a configuration, selecting as an expense voucher under the head purchases. Okay. Now, this is the recording of your transactions. See, the whole idea is everything will go to your ITC register. Today when the department asks for an ITC register, it's so difficult to pull out. So many Excel exports you need, expenditure wise you have to export, merge everything. There's a lot of manual work that comes out if you don't configure the things right. And also see, the key is getting the data right at the very first instance of the data entry, so that once your configurations are correct, the smooth reports at a one click, you will be able to get all that. So multiple variety of configurations have been shown here, and I'll be sharing this presentation. So whatever is required, yeah, this is the example which I took. See, we have configured this as expense voucher, and it's an exempted category. So you can certainly enter it based on your ledger. You can enter it. So, but here, here it is a with GST transaction where you can enter this also. So fuel expenditure, we have table 5 of GSTR 3B, although most people don't fill that table at all. Let's say we want to, comply to the law and fill all of those details appropriately, do a correct compliance to a great extent. So we can even configure that, if it's a fuel expenditure where you have to enable as non-GST. I'll just show you how the configuration works. Let's say I want to create a ledger. Hope it's petrol and diesel. Okay. I'll create it under indirect expenses. Now here, GST, I will select as, yeah, here this is what is undefined, which I was talking the other time. Okay. Now I'll say applicable, I'll say goods. Okay, here I want to do F12 and enable. One moment. I want to pass another voucher, which is my expense voucher. Okay. I want to pass it as an expense voucher. I'll just enter the date as 31st. Okay. Anyways, that's fine. Let's say ABC Mart. And I want to do this petrol and diesel. Okay. Now here, there is an option where we get, one moment. We have an option called non-GST details. I think in the Tally Prime, I'm unable to figure out. I will certainly share. But once we select this as non-GST goods, we can select, definitely enter this, and this will go to the table 5. Yeah. Yeah, I think we have it here. I'll just show you. Yeah. So sorry, in the Tally Prime, I'm unable to figure it out, but there is an option. I'll certainly share it. Okay. So again, if we have the salary paid where we want to do it as not applicable, so we can certainly select that so that it will not go to my returns related information. Then we also have this ineligible ITC related configuration, which I showed you the other time, where once we enable this, F12 over there, we can certainly do it. I'll say yes here. Yeah, here, yeah, I got it. So here it says is non-GST goods. So in the GST details ledger, once you select this as non-GST goods, you will get that over there. Let's say I want to set this as ineligible ITC. Since it's a not applicable case, it won't be relevant. But for other things, wherever I want to do this ineligible ITC, I can do it. So these are some of the points which we discussed now. Now, is it possible to have 100% automated return where once you put in the data entry, nothing else is required? By and large, you can still do, but there are certain areas which still require manual compilation and working, which is required. One is a creditor aging related reversals along with the interest. Because we have this rule 37 wherein the moment you do not pay your creditors within 180 days, then you are required to do the reversals of ITC along with interest. Now, how to get this report from Tally? Most of us would be aware of this debtors aging report for the CMA data or the banks, or ask even the corporate company law requirement where we have to get that aging report. But similarly, this feature is available even for the creditor aging. Let us have a look at how it works. Now here we have display, and then we go to statement of accounts. We have outstanding, we have payables here. Now, if we see here, we have the list of all the creditors along with the aging. And let's say I want to change the aging method here. I will say aging by due date or aging by bill date. I will go by bill date because that is what GST requires. And I want to select from 180 days. I can change the number of days here. So up to 180 days, this is what has been selected, and I get the report here. The most important thing to note here is we don't get this report automatically unless we have done a proper accounting. What do I mean by proper accounting? I'll show an example. Now, let's say there is a transaction, there is an invoice, there is a payment. So now while making the payment, I will have to choose this option of against reference. Here it has been selected as on account. If it is selected as on account, that aging report will not get a proper reflection. So you have to select against reference. Okay, this payment is against this invoice. So the what is balance due? See, out of the total bill, some 3,000 is pending. No. Now, for the system to capture how many days is left out for the 180 days aging, this against reference is a very important thing. While accounting the purchase also, there is this, we have to give as new reference, like we saw that here in this, while making the first time data entry, it will ask whether it is an advance, is it against a reference, is it a new reference, or is it on account. Now, suppose first you have made the payment and then the invoice is accounted, then you will select as advance, so that on recording the invoice, that can be given as against reference to this. So in this case, first there is an invoice, then there is a payment. So we will give as an against reference. Suppose this is neither an advance nor an against reference. You want to create a new reference for this transaction. This is something new, and it is a separate transaction of its kind. Let's say it's a loan. So you want to give it as a new reference, so you can give it as a new reference. Now you don't have time to track which invoice, what needs to be done. You want to first finish the data entry, peacefully sit back and then try and track this bill and the payment. Then you can even select this on account option. But once you select as on account option, your aging report will not work here. So this way, if we have a proper set of controls for accounting and tracking the bill-wise payments, then this aging automation automatically can be generated. Now, common credit reversals, we have this rule 42, 43 reversals, which is required. That also is not possible, or automatically it is not available in Tally. It has to be manually, done. I can also share you an example. Just a moment. I'll share an example of using an Excel file, we can do it, but it's the ITC classification has to be certainly done manually. Okay. Now, if you look at this file, this is a file wherein rule 42, 43 reversal is done. Now, this is your ITC register. Okay. Now, there are a set of few transactions. Now, this classification of ITC as per rule 42, which requires T1, T2, T3, T4, and C2. T1 is a totally ineligible credit because it is for non-business purpose. T2 is also an ineligible credit because it is for exempt purpose. T3 is a blocked credit. Again, this is also fully ineligible. T4 is a credit where it is completely for taxable purpose, so it is fully eligible. Then we have this C2. Let's say we have the audit fees, the printing and stationery, all common where we require proportionate reversal. So the ITC register has to be extracted, and based on this ITC classification has to be taken up. After this classification is done, we do a pivot table wherein, categorization wise we get it. Now T4, we will claim it completely. T1, T2, T3, we will not claim. Of course, with the new reporting format, which has come in from 1st of September 22, which requires 2B to be taken as the basis, and all these reversals has to be categorically bifurcated into permanent reversals and temporary reversals. 4B1 getting the permanent reversals and 4B2 getting the temporary reversals. Well, that is a different subject altogether. However, we have to classify it this way, then take a pivot table and get the sum totals of all of this. Then out of this C2, whatever the common credit, I will do a D1 reversal as per rule 42 with the E bar F. E bar F is exempted divided by total turnover. Now we have taken some figures. This is the exempted turnover, taxable, and all of that. So this is how D1 reversal could be arrived. Now, what is automation? What automation is possible is you can extract this ITC register from Tally, provided you have accounted all the ITC appropriately, and basis which you can do a classification in Excel and extract a pivot and do the D1 reversal as per the formula. Anyway, similarly, I mean, all this has to be manually done. Even Rule 43, which requires the life of the asset to be assumed as 60 months, where you have to do it, asset purchase wise, tracking of the Rule 43 reversal is required again, along with the interest. And all of these things are there. Well, all these are the matter of manual workings. Again, if there are any other reversals where, owing to ineligibility or owing to some litigation, you have kept it and all of that. Of course, with the new amendment which has come in, which has given effect, I think on 18th of July 22, where ITC availed and utilized is only subject to interest calculation. If it is only availed but not utilized, then it is not subject to interest on reversing. So anyways, all these things has to be manually computed. There is no way to automate it because it has a lot of factors to be considered. Again, if there are any amendments which are made, the value related amendments or some data entry errors happen, while doing manually and all of that, those have to be manually figured out and computed. Yeah, this is the creditor aging I showed you live. Now, mismatch resolution. Now, this also I explained. If I'm doing a wrong configuration, let's say with a 12% and treating it as an exempt transaction, it will give me 3 options. I can accept it with the conflicts, or I can override the conflicts, or go back and edit it. Suppose by mistake I was doing the data entry that way. So it will trigger and prompt me to correct my data entry. But if it is a conscious thing to override at the transaction level, I can still do that. Now, what is the relevance of all of these configurations? Let's talk about, ultimately what is the benefit for me out of this. So getting your configurations right will help us get our output and reports right. Now we have display, statutory reports and GST reports. So I'll first go to 3B, then come to GSTR 1. Now here, there are no mismatches. No, there are no corrections. So all my configurations has gone perfectly well. Let me make a mistake first and then let's see what happens, okay? Let's say I am using this sales at 5%, but I'm not recording GST, okay? So this is actually a sales at 5%, but I'm not recording the GST over here. Yeah, it got saved. Now let us see the 3AB report. Now, can you see it? I did a error in the data entry and accepted it. Now here it says there are some issues. There is a mismatch due to tax amount modified in the voucher. Now this is the one. So this way, once you do the configurations and try and understand the relevance of this, you will be able to figure out how this mismatch went into this and how, so that you can take an action on it. Okay, it is deliberate, it is by mistake, what needs to be done, all that could be seen. So this is a exception report where you get what all the mistakes happened from the configuration versus the data entry. Okay, so this is what is one thing. There could be multiple types of mismatches. Like I am selecting an imports item while the state I've selected as Tamil Nadu, which is within India. So which is a wrong basically because of the place of supply issue. It cannot be an imports transactions because the party is in Tamil Nadu. Or there could be a practical issue where it is like that and you still want to retain it. So once you identify the error, either you can exclude the vouchers, you can resolve by going and correcting the data and or accept as it is, Let us see what is it. Now, here we have ledger-wise exceptions and what action we want to take. Once we enter this, we get these action points. Do you want to exclude this voucher from GST return? Or you don't have time, so you want to file the return, you're on 20th, you don't have time to look into this, you want to exclude this and go ahead. Probably you'll have to make a note, come back and then visit this. Or if you want to accept as it is a deliberate that, okay, although I chose 5% ledger, that item is exempt. Probably there's a rate change which has happened and you haven't configured the item after the rate change. So you want to accept it. You may well accept it. If you want to resolve it, meaning you will go back to that entry, enter output CGST, output SGST and all that. And probably this is like, let's say there is a migration issue. You're using a invoice software, different software for billing, and you're importing the transaction into Tally. It was an importing error which you want to correct, so that you will resolve that transaction by going into it. Similarly, there could be an issue with respect to nature of transaction, taxable value and tax rate. This we also saw. So one is a place of supply. The previous one, what we saw was a place of supply related issue. This is a screenshot where the issue is with respect to taxable value and the tax rate. So let's say I manually alter. There is this round off issue, whatever reason. It is an 18%, but I am manually altering the auto-populated rate calculated output tax or input tax. So then this will come as an error. Here it is the tax amount, what I discussed. Here it is the rate. Here it is the tax amount. So all these types of error system is able to identify. Similarly, we can even see at the GSTR1. Now let me take you through GSTR1. Here I go to the statutory reports and go to the GSTR1. Here also I get the mismatches. Now, another important thing is, I think notification 78 bar 2021, where this HSN requirement is mandatory for up to 5 crores. B2B transactions is mandatory. Above 5 crores, it is all transactions are required, it's mandatory. Again, for up to 5 crores, 4-digit HSN, and above 5 crores, it is 6-digit HSN. So once you configure, I took you through the ledger level HSN configuration, group level, item level. Once we configure those, HSN and stuff, we get this HSN report, that is table 12 related information we get here. And even for the GSTR 9, if you see now, the table 17 has to be mandatorily filled. The GSTR 9, the HSN outward related information, unless you fill it, if you have B2B transactions, then it will not allow you to proceed to file. So if these things will come handy for doing all such compliances. So again, we have, we will get an information about what is the kind of mismatch. For example, information required for generating table-wise details not available. Let's say I am doing an export transaction. I have not filled in shipping bill number, shipping bill date, and port code, all of this, for filing the GST returns in GSTR1, table 6, all these information becomes critical, especially, you're going for a customs rebate method, or even the refund for of excess lying in electronic credit ledger. These details becomes very critical. If you do not fill it, this kind of errors comes in. You may take a call whether you want to fill in and then file, or you want to exclude it, or you want to accept as it is. So these are the ones. Now that we understood the importance of configuration, what is the optimal mix? Now, what do I mean by optimal mix? I showed you that, let me again go back to that practical case. If you look at the duties and taxes ledger, you have so many ledgers: input separate, rate wise separate, output separate, rate wise separate. Can you manage with a single CGST, SGST, IGST? 3 ledgers, can you manage both outward and output and input? Yes, perfectly possible. Tally allows that. Can you have common, a single ledger like input CGST, but don't want to specify rate? Similarly, output CGST, don't want to specify rate? Yes, that is also possible. If you want to have multiple ledgers like this, that is also possible. All 3 options are possible in Tally, but it is your decision as to how you want to go about. Now, how do we decide how many ledgers do we have? Of course, the more the number of ledgers, somebody doing data entry, instead of 5%, they chose 9%. Gone. Again, an error in the data entry. So suppose we have only input CGST rates, let the system automatically pick based on the item. Okay, item configuration, that is also possible. So if we have only minimum ledgers, let's say CGST, SGST, single ledger, I will have both for output, input. Okay, now I will do a sales return that will come and sit in my debit. Now to identify, I'll have to again drill down, dig a little and all that. Suppose if I do a output CGST configuration and then pass a credit note entry, I will have debit in that ledger itself. So if at all I want to check on those transactions, it is easy for me to get those reports. But if I have too many rate-wise transactions, rate-wise ledgers, data entry, there are more chances of errors in the data entry. So I've just given an example of how we can have maximum ledgers. I've taken the example of a carriage inwards. Like we have GTA forward charge, interstate, intrastate, GTA reverse charge, interstate, intrastate, again RD and URD, because what comes under RCM and what comes under forward charge we want to know. Then exempt intrastate, exempt outward, interstate, non-GTA intra, non-GTA. So if we want all of these classifications, we can have 10 ledgers for just one carriage entry, carriage inwards ledger. Ideally, we can have 3 ledgers: inwards forward charge, inwards carriage inwards reverse charge, carriage inwards exempt. So that the purpose also we will achieve, data entry also will be much simpler. And then, reports also can be easily generated. So now I will be taking you through certain Excel tools and documentation about how we can actually have appropriate documentation and use our resources very effectively. Today reconciliations will take a whole lot of time if we do it manually, especially the GSTR 3B and 2A or 2B reconciliation will take a lot of time. How we can use a couple of tools and help ease the process so that available resources we can use it very effectively. I want to show a practical example of matching this GSTR to the ITC register. I'm sure most of you would be aware of the VLOOKUP or the HLOOKUP, which is there. I will be taking you through something called as fuzzy lookup. Okay. Of course, there are so many tools which are available in the market where they do a lot of automatic, ITC reconciliation. We also use a couple. GST Zen is one tool which we use, which we find it very handy to extract the yearly reports and the yearly GST reconciliation, and it's quite reasonable also. I'm not vouching for any product here. It's an experience which I'm sharing because most of the work what system does is reliable. Manual is always prone to errors. So I don't believe in collating the various monthly informations and combining it to one Excel report manually. It's both not fully reliable, at the same time not effective way. So wherever possible, I think using tools will save a big lot of time and we can do the things smarter way so that we can reserve human intelligence for the analytics which tools cannot do. I think that is what I'm trying to look upon. Now, suppose you don't want to use any third-party software, but you want to use any Excel features which is available. Then if that is your idea, then here is something which you can look for. This is something called as Fuzzy Lookup, which is a free Excel add-on tool. I mean, it is easily downloadable. I've just shared the link also. It's a free download which is available. Now, once you download and install, I'll just take you through that file, sample file. Okay. Now, this is a file on which already fuzzy lookup has been applied. Let me just quickly, I've taken only some 20 transactions for an example per se. Give me a minute. Yeah. So you should have the data in this tabular format. Okay. It should not have filters. Now you will select this table and then here you have an insert table option. Then you will say table. Okay. what I'll do is I'll open another Excel file and just try to show you, because it's already a worked upon file. So probably that's why it is not allowing me. Give me 1 second. You know how it is always, it's, sometimes. Okay, this is my ITC register. Okay. I'm just copying it. I'm just doing a paste special value so that I get only the data, and I know this is not in the format which is expected. What you can do is you can just select this, and the automatic formatting will happen once you say insert table. Now you say yes. Yeah. So you have to change this to date. Let's say you want a short date. Okay. Okay, now you got the date part. Then this is also, I'll just select accordingly. It's a short date. Yeah. So all other things are fine to me. So these are the ITC register related common fields which we generally have when we do the workings. Now what I'll do is, this is my ITC register. Okay. Now what I did was I selected the data and inserted table. So I selected insert option and then table. Once you click here, you have this table tools option. Now you can name the table here. I want to name it as ITC register. Okay. Or I'll say ITC books. Okay. This is ITC books. This is the name I have given. Okay. You can't give a space to the table name. So that's why the error. Yeah. So this is ITC books. Now, once you install, you get this additional option here. You can see it's a fuzzy lookup, it's called. And that option should be there. So you have to download that add-on. And then once you install, you get that. Okay. Now you have renamed this. I will take now the 2B. Now this is the GSTR 2B. In similar fashion, what I've done is I have selected the 2B data and insert table option have been selected. And if our file already has headers, then I will just show you what we do. I'm just selecting this 2B information, whatever has come. Now I'll say insert table. So it's already inserted. That's why. So then it will have, my file already has header. So once you select that, the first row of your selection will be treated as a header and it will come in a different color. Okay. Now after this is the next part. Okay. Now you want to do a fuzzy lookup. Now you select this option of fuzzy lookup. Okay. This is the feature. And then once you select here as fuzzy lookup, you get this additional window. For convenience, you can just extend this window so that you will know what you want to do. Now, what is the purpose of fuzzy lookup? In VLOOKUP, you can compare only one column against another column. If you want to do multiple, comparison in a single row item, it will be difficult. So that is why fuzzy lookup, you can have multiple parameters for the selection. Now, let's say you want to one parameter by which you want to do the comparison is GST number. So in your ITC register, you have your GST number. In your 2B also you have your GST number. Okay, one more point is we have two tables which we are comparing. Here we have the option left table what you want, right table what you want. All these while we were comparing ITC register with 2B. Come the new GST where 2B itself should become the basis. Probably I will keep 2B as my left hand side and ITC register on my right hand side. And then what I will do is I don't want invoice date. because I might have accounted it on a different date. What I want to do is I want to compare my GST number of the supplier and GST number in the 2B. What is there in my books versus 2B. There is this in the center portion, there is a button. Once you click on that, that will get added to the match column here down. Now, next I want to compare taxable value. Only if GST number matches, it is of no use. My taxable value must match. Okay. Now I will again add that. Once I click the center button, that one more match factor got added. Now I also want to match, let's say, central taxes. Okay. I want to match integrated taxes. All taxes also I want to match. Okay. So likewise, I will add what all I want to match here. So 3 things got added to my list. Now in the output, I want to filter few of the columns I can do, but now I'm keeping it likewise. The most important thing is similarity threshold. I have kept it to the middle, which is the default. Let's say I want similarity to be 100%. Unless all of this 100% match, it will not come in my matched reports. Let's say I want to match very, vaguely, by and large, if things match, it is okay. I can reduce this. I can move this 0. I want to keep it as it is at 5. Okay. Then I will say go. Now on processing this data, I get this report here. Okay. I'll just show you. Now I got this report where the fuzzy lookup has matched my books versus 2B and figured out the equivalent match to this. Now, if you look at here, what is the similarity? It gives you a percentage of the similarity. In this case, it is a 94% match. So you may want to filter, like let's say 80%, whatever is there, you want to figure out that. So that way you get it line item wise. You want to apply further formula here. Let us say you want to check what is the mismatch. You may probably taxable value versus, you may do like this. You can just copy paste what matches and what doesn't match that way. So this will give you a report where each item, connected item, is placed in the connected place. Okay, one moment. Yeah. So these are the results which I got, wherein, you imagine if there are 500, 1000 line items, it will be very easier. You are seeing some of the things are coming as blank. There is nothing over here. What does it mean? It is there in my 2B, but it is not there in my books of accounts. So this way you can use this fuzzy lookup for the purpose of doing a 2B reconciliation with your ITC register. I have given the screenshots here for your quick reference in the presentation, what I took you through. Now, what are the other control procedures? Most of the times, data entry is done, returns are filed, but year end, if we match the portal ledgers, electronic ledgers, be it liability ledger, credit ledger, cash ledger, there might be mismatches. It would be a good practice that closing entries month on month, it is passed to all of these electronic ledgers so that what is there on my portal and what is there in my books of accounts get reconciled. Having the index of filings, I'm sure all of us would have, the kind of the work papers and everything. Probably I just want to show a sample index, which will help us to keep things handy. So there are some quick links over here. So we have this, it could be a good point where, everything is available in this file, and it could be shared as a Google sheet link, which is accessible only to your internal persons, so that emergency or some reason you need a password or user ID of a specific client, it is there lying in the office and server is closed or server is shut down, and you immediately are not able to access whatsoever. So probably making it as a Google sheet and with a protected, it could be password protected or something, so that only required people can access the file, but still it is available. Probably you can put it on your Google Drive of the office mail ID also, so that whenever it is required, you can take it, and it could be like who is the staff who is allocated, who has reviewed it, what is the user ID password, and this ARN of the filings, this is updated here so that we know, okay, this return has been filed. Similarly, separate sheet for the CMP08 transactions for 3B1 and other returns wherever, it's a GSTR 7, 8, ITC 04, now that it has become half yearly. And especially with respect to this, DRC 03, this lot of, track is not available at the time of GSTR 99C, whatever DRC 03s are done with respect to each, entity. If index is maintained like this, it comes very handy. Similarly, the PMT 09s. Anyways, all these are available in the portal, but probably at the time of passing the, making the filing itself, along with reason, why did we file this? Suppose somebody forgot it, mentioning it in DRC 03, at least later after identifying, this can be as a good control point. And what the case wise, above 9 crore, above 5 crore, below 5 crore, optional cases, mandatory cases, all of this could be a good, index to maintain. Then OTP management. Many a times there's a huge struggle which happens to the OTP management side, because client doesn't pick up the call at that time, or the person who is authorized. There is an option to forward the mail which comes from a specific mail ID to using the Gmail feature. I think that could be used with the consent of the client, so that whenever an OTP pertaining to GST portal is there, that could get auto forwarded, so that you need not spend unnecessary time on following up with the clients for the obtaining the OTP. So that is also one of the things. The master documentation I was talking about, it's very important to have substantiable underlying transactions for the returns. So I'll just share a sample format. I'll take 3B. If you look at 3B, it only says, table 3.1. Many a times a JSON file is extracted. That's all you have. So ideally, I'm sure, you will be aware in Tally, any screen you go, you have the export to Excel option, any screen for that matter. So you can just say Control E, you can select the file format here. Okay, you can say configure. Let's say you want it from the file format. You want it in Excel. So you can extract any report in Excel, in Tally to Excel, any screen for that matter, so that you get it handy. So whenever there is a figure, it should have a corresponding, underlying transaction to it, See, now this is a sales register which is linked. This is exported every month, spending another 20-25 minutes. At least even if during the return filing time, if it is difficult, at least after returns are filed, if these things are exported to Excel and then linked and checked it properly, okay, this is what the data has gone. Tomorrow, if you want to identify what transactions has gone to the 3B return or the 1 return, you will get something handy. Otherwise, it's so difficult. What figure went there? I'm sure during annual returns and 9C time, or even during departmental audit, we are facing all of this. That accountant is gone, that article student is gone, that case worker is gone. We don't know what is the data which went to the return. This is the pathetic state which practically happens. So having substantiable documents, underlying transaction level information, each line item has information, it hardly takes 10-15 minutes to export all the things and just have it as a working papers. So these are a couple of things which I just wanted to share. This is a sample ATT one where you get a whole list of details where they call for the sales register and all of that. So even for the 9 for that matter, I'll just show you. So this is the 3B which I showed. GSTR 1, anyways, it's a table information. Either by you get this Excel reports from Tally also, or you can export and consolidate also. If you're using the Excel utility, then you get this report. So having transaction level information is very, very important. This is a GSTR 9 again. Each table, whatever table we prepare, this is, let's say, table 4, we have this data. On doing a control flower bracket, we should get access to that transaction level summary. Otherwise, it's so difficult. And all the notes, what was done, everything in one file, where one GSTR 9 working file, you get A to Z out of it. Each table, each subtable, what all entered there, everything should come here. Like there is RCM. There's a separate file for RCM where what all went over there. So that way, each this comprehensive workings helps us even to provide quick information during the departmental audit. Of course, diligence would be required before submitting. Many a times, in the enthusiasm of submitting, what all department asks, everything people submit. It is important to note that Section 35 read with Rule 56 provides for specifics what can be submitted, what is required to be maintained, and what is required to be submitted. See, there is many a times we see even department asking for backups. Are they within the power to seek backup of the data? To my mind, no, because Rule 56, which talks about maintenance of books of accounts and providing access, it means you should provide access to view it. Backup, nowhere in the act it specifies the officer is entitled to ask for the very backup of the data. Of course, access to be provided, user ID, password, credentials, all that to enable him to have a look at it. But backup is not required. That way, we'll have to evaluate what are the requirements as per the law, and only then have it. Of course, we have our internal control mechanism. One person makes it, another person checks it. All this will help. And many a times we see that our team members will save the file names in some name. After 5 years, after 2 years, or even after 2 months, we forget what is that name. So a small practice which we implement, stating like the file name can be a little lengthy, but it should indicate on anybody reading that file name, they should be able to identify what exactly is the file about. These small practices and small training for our team members will help go a long way. Otherwise, we have seen, rather than doing the work, searching a particular file itself takes a whole lot of time. So these were a couple of things, which I wanted to share in today's deliberation. As we come to the close of the session, I have few last closing remarks to make. Work done but not documented is equal to work not done. I have learned it from my guru and mentor. Whenever we do it, unless we document it, it is equal to work not done. We are all in this audit profession. I'm sure all of us have we thoroughly do all of audit documentation, but there are some effective methods each one of us adopt, and these were some of my experiences and learnings to share with you people. Facilitating effective knowledge transfer. Many a times we see that there are trained people, at least we have 2-3 or main pillars in the office who are thoroughly trained, and some reason they leave, you get shattered. So there should be an effective knowledge transfer. Whenever there are complex cases being recorded, we better to prepare SOPs, the standard operating procedures, like we do for our clients in our office. Also, if we can implement this 3B file, how somebody checks, what are the entire checklist which is there. Also, today with the screen recording softwares, everything available, 1 month return, a team member can drive the other people and do a screen recording as to what steps are done for the verification of the case. Of course, things may change, case to case basis or even month on month basis, but broadly, we will have some knowledge which we have shared. Otherwise, we end up training from scratch to the new members who come, and we lose a lot of our productive and effective time, which we can deploy otherwise more productively. So having knowledge resources in our organization plus storing them appropriately will go a long way to facilitate this knowledge transfer, so that we can be prepared for the assessments and audit. Otherwise, it's a whole lot of rework, which most of us have experienced. 3 years ago, 4 years ago, some article student had prepared that file is not available. We don't know what to submit for the department to audit. All this jugglery, we are doing the duplication of work, one more time, rework, all of this happening. So like I shared, there are so many tools which are available, which can simplify the mundane work some more, money will go into it, but it's all worth it. It is more effective than doing it manually and, ending up in mistakes. So wherever it is possible to mechanize and automate, we should definitely take that step towards it, so that we reserve the human resources for a better task, and, wherever it is required, and our time also gets effectively used. So with this, I would like to, end my presentation. Any questions, I will be very happy to take up. And I hope this session has added value. Thank you. Thank you everyone for the patient listening.
Surely, ma'am. The two members have raised their hands. They
Okay.
can unmute themselves if there is any question from them. Rajiv and Sabu. If there is any question from member, they can post in chat box or Q&A panel.
Hello.
Yeah.
Yes, sir.
Yes, you had mentioned you could do a rate change at the transaction level.
Correct.
And my question is, once you have defined a ledger as sales 12%,
Yeah.
now if you change the rate there,
Hmm.
the whole purpose of defining that ledger as 12% gets defeated, isn't it?
That's true. See, let's take things practically. Your most of the transactions come at 12%, and there is one accountant sitting over there who would like to, override the transactions and first finish the data entry. See, there is that facility which is available. It is not that since it is available, we have to use it. That provision is there, and many times accountants do use that at the time of, or even those billing sales people who bill the transactions, they use that. But yes, it's a matter of control. But it will pop out as it will prompt us first that there is a mistake. If we want to override, that feature is available. That's all I wanted to share. Yeah.
Now, this travel expenses and all this, are these to be entered through a purchase voucher or?
Yeah, see, like I shared, there is this expense voucher which we can create. Any number of voucher types we can create. We can create under the category purchase, but head it as an expense voucher, and we will use the specific ledgers so that it will go and sit in my indirect expenses itself, but it will go to my returns. I think I missed showing that ITC register. Just thanks for that question. One moment. Okay. Yeah. So the moment we, configure things as, expense voucher. Okay, here the voucher type is coming all purchases only. If we have entered any expense voucher, that also will come here in my 3B report in statutory reports. So that, while claiming ITC or extracting this, we can export this to Excel and compare to 2B. All of that is possible. Yeah.
Okay. One more question. It's not related to GST. Just want to know now, if you have made a payment on a particular date and the invoice comes on a subsequent date, now you cannot use that against reference.
Yeah, you have to first enter it as advance while making the payment.
Okay.
And while passing that invoice or while recording that invoice, then you can say that against reference, or instead you can say new reference for that payment and then give it as against reference. Yeah, I stand corrected. You can make it as new reference for the payment and then against reference for the invoice recording.
Okay. One more question now. This is also outside the GST. Now, there are particular cases where you cannot have an inventory, purchase inventory. Sales, of course, you can. Like a particular client, I have, he tenders for the old confiscated vehicles and scraps it.
Okay.
Now, the sales, okay, you can quantify it. You have this much of scrap iron, this much of rubber, and all those things. But the purchase, you cannot define it as an inventory because you have a hell lot of vehicles coming. We cannot define any quantity or rate for that. Now, in that case, can we use the inventory, this thing?
Yeah. See, if we configure only, see, the thing is, how do you invert it then? See, for something to go out, first it should come in, right?
Yeah.
See, for manufacturing industries, they pass the stock journals where input is different, output is different. Now, input got converted into something else.
Yeah.
Inward HSN is different, outward HSN is different.
Yeah.
There is something called a stock journal where you can change the HSN and there should be a reasoning and backing for it. Yeah, you can do that. But without having inward, without having inventory, only outward I want to have inventory. How is the inward coming? See, you can't think practically. I don't have stock. How can I sell it?
Yeah, I do understand that, but this is a particular situation where he tenders for his old vehicles lying in some police yard or confiscated yard. Gets it for around 1 crore or something. Then he scraps it and sells it. Okay, when he scraps it and then he sells it, he has a definite quantity for that.
See, what can be done?
Is there any problem if if you use maintain inventory, then the purchase also has to go as inventory? Is it?
See, what you can do is, like, while coming, inward came as one vehicle, outward went as 20 items of the vehicle.
Yeah.
Stock journal can be used for that. Yeah, can we have the next question?
Hello, ma'am. My name is Gunshekar.
Yes, sir.
I have questions on 2 areas. One is the RCM payment on the rent, and another one is the sale of fixed assets. So when we do the selling of fixed assets, can we do the automation for entries in the tally itself, or again that should be manual entry itself?
Definitely we can do it, sir. So, like, I mean, RCM for rent, you mean to say the recent change for residential property? That is
correct.
Yeah. So you can create a ledger called rent RCM, something, whatever you want to remember it like that. Then enable inward supply related RCM for that, so that will come in the report.
Okay, so if I make that rent payment entry, so it will have a two effect. One is rent output liability, and the next subsequent month the input credit. Both the effect it will give, or have to pass separate entries?
Pass separate entries. See, the whole objective is for that to go and reflect in statutory reports. Why you have to enable reverse charges? So that it will go and sit in my statutory reports.
So that stat adjustment entry, we have to make it separately.
Yeah, I'll just share my screen and show you. One moment. Yeah, this legal charges is there, no? Now this I will say, here I'll say reverse charge applicable, yes, okay. Now here I have to again categorize, let's say I want to do it as 18%. Yeah, it is there actually 18%. Which month is this? March, okay. So once I enable the reverse charge over here, it should ideally come and sit in my this thing. Now
output liability, it will come.
Output, yeah. In my GST at 3B table 3.1D, it will automatically come. Okay. Where is my presentation file? One moment. Too many files are open here. Give me 1 second. I'll just close it. Yeah, meanwhile, any other question by the time I open that and demonstrate?
So in the meantime, so subsequent next month input credit, we have to put separate entry, right?
Correct. ITC we have to take. That's what I'll show you. We have made one entry for that. See, I am of the view that, we can claim the credit in the very same month of when we discharge. Okay. So based on that perspective, this is what the entry we have given. So this can be even taken as an expense journal where, input is also there and output is also there.
Generally, this is what is many people also follow, ma'am.
Correct.
Same month we can take input also.
Yeah. I'm of the view that we can certainly take it because it's a creditable payment. On payment, it will.
Because generally, what the people say, once you make payment, then only it is eligible.
See, that way, my other supplier has not even paid. We don't know when he has paid. I might file my 3B on 20th. He might file it on 22nd. Does it mean entire credit becomes ineligible, although it is coming to be? Anyways, that's a different argument. We are not going on the legalities of it.
So department is accepting this stand.
There are questions being raised, but department will question anything and everything, whatever comes in its favor. So we'll have to substantiate that for sure. Yeah.
Okay. And sale of fixed assets, any automation is possible in Tally?
Yeah, sale of fixed asset, you can have it as a fixed asset, one voucher type you can have, or regular sales itself, you can do it. But under the category, I mean, you can configure a voucher type as fixed asset and fixed asset sale under sales and do it. Or the same sales only you can use it. But once you use that fixed asset item, that will go and impact your fixed asset register only. It's possible.
But the application
Better to
of
use a separate voucher type for that.
But the calculation of GST is different because it will be based on the depreciation, etc.
Yeah. So what you can do is you can use a optional voucher for that. It will not have posting effect, but for your documentation, you will have it. But adjustment you have to make through journal entry in such a way.
Manually, the calculation, I think you have to make it manually because.
Manually, yeah, that's right.
Correct. Thank you.
Yeah.
We are done with questions. Is there any question from audience? If there's any, they can write it to the mail ID that is shared at the end of the slide. Ma'am, am I audible?
Yeah. Do we have any Q&A?
They haven't posted any questions.
Okay.
So if there's any question, they may be writing it as SIRC CP mail ID. If there is any, we'll share it to your mail.
Sure.
And if any, they can solve.
Just a question on sharing these presentations. Now, the earlier sessions was on GST. They promised the sharing of these presentations. How do you share this thing? You will send it by email or?
Yes, sir. By email only. You can post. Can send a mail to sirccp@ICAI.in. We'll revert it with respect.
And I'm also sharing my mail ID on the chat. If anybody wants, can share the request through a mail.
What is the
Yes,
mail?
usually you can write for any presentation. If at all on request, we'll send it over mail, sir.
What's the mail ID?
I'll post in chat box.
Okay, thank you.
SIRC@ICAI.in. Ma'am has also posted her mail ID. If there is any question,
Yeah.
they can post the question directly to ma'am.
Okay, thank you.
Thank you, sir. Thank you so much, ma'am, for your time spent here on this session. On accepting our invite on behalf of Chairman, Secretary, and Office Bearer and absentee, we thank you so much for your time spent and look forward to have you for any physical session notes in future. Yes. Thank you so much.
Thank you. Thank you everyone for your patience.